Hey, welcome back to this episode of Think Business Live. Looking forward to talking to Jason Yourofsky. Jason, it's always great to see you. You've been on here a lot, CEO of Mortgage Token and Atlantis Financial Group. But today we're talking about mortgages and we're talking about blockchain. And I just want to read a little bio about you, or really just kind of bring to the surface everybody to educate a little bit on what is mortgage token and token home equity. So let's start there. Because I think that's something that is still really confusing to people. So let's start there. What is mortgage token and what is token home equity?
Well, thank you for having me on, John. I appreciate it. Token home equity and mortgage token was really a dream that I came up with about 2 years ago during the height of the crypto world. I saw a niche in something called blockchain tokenization of debt, where people were able to fractionalize ownership of debt. 15 or 20 years ago, people were able to start investing in other people's debt through companies where you could be the private investor. I saw tokenization of mortgage debt being something that would be a big thing in the future. And currently, right now, in the doldrums of what we would call the crypto winter, the one bright star happens to be blockchain tokenization of real world assets, such as mortgages, real estate, gold, silver, stocks, bonds. And we're one of those players. So, mortgage token was created to give people the ability to invest directly in mortgage debt, receiving a higher interest rate on their savings money than they would through traditional investments.
Talk about that as far as how they would be able to track that, read that, understand that, access that. I think that's one of the things sometimes that's
Yep.
confusing for people.
So there's going to be a lot of bridges for people that don't want to have a crypto wallet. One of those bridge companies is going to start allowing people through traditional investments like a stock or a bond to be able to invest in these types of tokenized debt. If you or I were to invest in mortgages right now, the only way to do so would be to buy a REIT that may have a slight exposure to mortgage debt in what they're actually providing the REIT holders. We're going to bypass that directly by creating second mortgages in a niche market. I'd call it. We call them micro home equity loans. So right now, banks are ignoring people that want small, quick home equity loans for home improvement projects. We're going to fill that niche by offering a product through our fully licensed mortgage entity. And instead of selling them to a bank or a REIT like we traditionally do in the mortgage business, we're going to pool money from selling mortgage tokens so investors can be the bank. And the investors will receive the interest directly instead of the bank. If you put money in a savings account, a bank, if you're lucky, gives you 1%. What are they doing with that money? They're going out and lending it to mortgages. They're putting it out there in car loans. They're doing all sorts of different things with your money to earn an income for the bank. Right now, in traditional finance, there's no way for you to earn more than that on your savings. So our goal is to give people a bridge to earn a much higher rate of return. And on the flip side, we want to introduce a product to the market that's currently not being served in the traditional, we call home equity or second mortgage market.
Yeah. And so, for someone who's listening to this right now, not fully grasping exactly what it is, I think there's the pioneers who are, diving into this type of business and leading the way. And then there are the laggards, right? Just kind of referencing some of Jeffrey Moore's Crossing the Chasm, great book. I read it 25 years ago, and it seems to always be relevant, and especially in adjusting evolving markets where there's new technology.
Agreed.
And so you have these pioneers that are leading the charge on all of this, and then you have some early adopters, and then you have some of the laggards, right, who are just kind of sitting by the sidelines until it makes more sense, or they see other people succeed, or they see where the failure drops out to temper maybe the fear that they have in it. What do you say to those laggards who are maybe they don't come to the game because it's just not something they're interested in, and or just kind of maybe late to the game? How do they
They
start
use
to?
Let me
Move.
give you this example, because yesterday I was speaking with a financial advisor who was incredibly successful. But when I mentioned blockchain, crypto, or anything having to do with what we call Web3, or the third version of the internet or web products, immediately he backed off. And I said, "I'll give you a good example." I said, "I've lived through the entire internet revolution, as have you, John. We've been lucky enough to learn to type on a typewriter and then use
Yeah.
to type on our screens now. So I saw Web 1, and I was an early adopter. I was advertising for mortgages back in the 90s, believe it or not, on the internet. Web 2, we call that the technology of social media and the ability to communicate with people via the internet. Now, Web 3 is the ability for us to actually do financial transactions over the internet directly, peer to peer or person to person.
Yeah.
So, even though there's fear of adoption, I would say this to you: the people that held on to Amazon stock through the 2001 collapse, where it lost 80% of its value, are today worth tens, if not hundreds of millions of dollars. So, the fear of Bitcoin and other cryptocurrencies, which are just a piece of blockchain. Remember, crypto is not blockchain, it's just a piece of it. It's those people that will hold on for 5 to 10 years will see Amazon type returns.
Yeah.
Now, there will be a lot of fear between now and then. There will be a lot of crashes and ups and downs. But the idea of tokenizing debt, I don't have to be the one to say it. Larry Fink, the CEO of BlackRock, the largest holder of assets in the world, 9.5 trillion in assets, just said that tokenization of real world assets, including mortgages, will be the largest thing by 2025. And by 2030, everything will be tokenized,
Yeah.
because it allows you and I to invest the way we want to without somebody telling you you have to buy this whole big pool. It'd be like going to a grocery store and buying a whole basket at a time, which is how we invest today, compared to going to the grocery store and picking out just the item you want off the shelf.
Yeah.
Tokenization will allow you to customize your investments.
Yeah, that's a really good analogy. You're talking Web 1, Web 2, Web 3. I just want to say for the listeners, I just want to kind of break that down a little bit. Web 1 was ranging really from 1991 to about 2004. Web 2 was 2004 through 2021. So, Web 2 was a good 17 years, right? I mean, we kind of
Yeah.
lived in that Web 2 for a long, long time. Web 3 really didn't kind of get its legs till about 2022, kind of the coming out of COVID world. And so we really still are in this we create, we own new environment of the Web
True.
3. So for those who are thinking that, maybe, they're so behind the curve, it really is new things we've been talking about and hearing about as far as NFTs and things of that nature that live in the web world, and the Web3 wallet and mixed reality and metaverse and things of that nature. And so fast forward 10 years, right? So you're talking about what tokenization will look like, per, who you were talking about earlier, in 2030. So what?
I could give you a great example. By
Yeah.
2025, where mortgage token will be, you'll be able to, on your computer, log in when you are ready to invest money, click on a link, click on another link that will give you the entire pool of loans that we're currently servicing in order to produce the yield that we're giving you as an investment. And if you're sophisticated, you can go by loan because it's all on the blockchain. Or if you just want a synopsis, which most people do, you'll be able to get a snapshot. And the snapshot will look like this: current pool that you're investing in will be $10 million in second mortgage notes, average credit score 750, average interest rate 12%. Then there'll be a yes or a no. And you'll be able to buy mortgage tokens that'll pay you 12% back in return by investing in this pool directly, where currently only the most sophisticated of borrower or banks and or funds can invest in these large pools. And there's no liquidity, which means once they buy it, they're holding that loan until maturity.
Yeah.
You can own a mortgage token today and say, oh gosh, I need that money back, even though I'm earning 12% on it. You can sell it directly to the pool tomorrow, meaning you can invest short term in different things that will pay you money. Now, that may seem complicated for some people, but trust me, user experiences are getting better and better and better in blockchain. It's going to be so easy as something like you would log into your normal bank account today and decide if you want to put your money in a CD or keep it in your checking
Mhm.
account.
Yeah. Yeah.
So
And
that's
so,
just one example of there's a million things that blockchain is working on. This is just the one pursuant to what we call finance or DeFi.
yeah. Yeah. What types of businesses do you think will continue to pop up over the next couple of years? I recently interviewed 12 kids from University of Michigan in the Entrepreneurial Club,
Yeah.
and many of them are starting tokenization companies, blockchain companies, crypto companies, et
Yeah,
cetera.
we have a couple of them helping out with Mortgage Token. They're great.
Yeah. Jackson Blau is, I know,
Mhm.
here, and has been, he's helped me organize all of that, and he's very into it right now.
Don't
He's actually taught
underestimate
me,
Gen Z and their
yeah, no,
intelligence.
he's taught me a ton about it. But what types of companies do you think will begin to pop up that maybe we're not seeing right now? Where do you think this
I'm
will?
going to give you an example that hits home to you.
Yeah,
You're a sole proprietor business owner. Let's just say a company pops up tomorrow that allows you to tokenize 25% of the ownership of JonDwoskin.com.
yeah,
Now, you'd say, well, why would I want that? And I would say to you, just like any large business, could you imagine having a capital inflow of, I'm just going to throw out there, $1 million for 25% of your business
yeah,
that is now publicly traded, where you always have the option to buy it back, but you're now cash rich without having to borrow money from a bank or make payments to a loan, and you can grow your business. Now, individuals such as yourself that have successful businesses, or marketers, let's call them social media influencers, artists, quite a few record labels are shaking in their boots because tokenization allows artists to go directly to the consumer and own a piece of that artwork and or a piece of that music. You could actually invest right now in upcoming music from potential artists and own a percentage tokenized of the returns that that artist makes on that piece of music.
yeah,
That's again a crazy explanation, but now you're dealing directly with influencers. Have you ever watched a news channel and like maybe a one person on that news channel? Now that news channel produces quite a bit of media that you watch for no other reason than it's the only way to find your perfect person. Pretty soon, that person will be able to tokenize, and the ability for them to directly communicate with their community. And that tokenized income is an investment that you're making in that person or that person's future income and or earnings. So really tokenizing gives you the ability to
yeah.
invest directly without having to buy the whole shopping cart, like I like
Yeah.
to use as an
What's
example.
what's amazing, I love your analogies. What's amazing is, as a business coach, a lot of times what I talk about with clients is the power of productization, right? How
Mhm.
as an individual, you're a product, as a company, you're a product, what you sell is a product, et cetera, et
You're
cetera.
right.
And this really makes everybody and everything a product that
That's
that
true.
that the consumer can then really decide on a very, you said earlier, kind of on a micro level where they want to invest their money and their time.
And I would never tell anybody today to take 100% of their investment and throw it into blockchain. But when you diversify, the people that diversified in 2000 or 2002 into technology, maybe 2000 is a bad example for the '01 collapse, but
Yeah,
even the ones that invested in 2000 and held on to now, that's a large part of their net worth. Why? Even though they invested 2 to 5% of their net worth in this new budding technology, they may not have known what they were investing in. But now, today, it's the companies of the future. It's the Apples, it's the Amazons, it's the ones that like Facebook in 2010 or 12. People didn't realize then that this is the way people communicate. I believe that blockchain is the way people will invest, as does Citibank, who just opened up an entire blockchain division. Fidelity opened up an entire blockchain division, as did Chase Bank, even though their CEO sometimes doesn't have positive things to say about individual cryptocurrency. He believes in blockchain and the technology. And then you have Larry Fink, obviously. So when you have the smartest minds in the world saying, maybe you shouldn't invest directly, but we're going to, and we're putting a good chunk of our capital towards this new technology, people should be alert and aware to know that things like mortgage token and, you know, other products that are going to give them the ability to earn a great investment return are available to them even today.
I love it. I love it. All right, Jason, quick speed round. You ready?
Sure.
I know. I see you have a lot of books behind you. You're a well-read guy. Since we last spoke, a book that's had the biggest impact on you.
I'm gonna defer from a book to an individual. I right now am following quite a few people in the tech world, and people may love him or hate him, but Elon Musk and everything that he's doing right now through redefining social media to redefining the way we pay people, he is my influence, and everything that he writes on Twitter happens to be longer than a book, so I'd constitute that as my number one read
All
right
right.
now.
All right. Best piece of wisdom you've ever received.
Best piece of wisdom you've ever received: happy wife, happy life.
Okay. Finish this sentence. One thing everyone can do to learn more about everything you're talking about on a consistent basis is,
Go down the YouTube rabbit hole. Type
yeah,
in what is DeFi, what is crypto for dummies, blockchain for dummies. It's how I started in 2019. Everybody can learn.
yeah. And tell everybody who your ideal clients are and how they can connect with you.
First-time home buyers and repeat home buyers that are locked out of the home equity world right now, we'll be offering by July of this summer a micro home equity, much quicker, much easier than a traditional bank at lower interest rates for them to do home improvements. And on the flip side, mortgagetoken.com has a contact us for potential investors as we launch Mortgage Token over the next 18 months to the public. Right now, we're in a private funding round, but our public funding will be available in the next 18 months as well for consumers and other individuals.
It's great. Jason, I always appreciate you being on the show. I loved the analogies. I think community, you know,
Thank you.
everything we talked about today are things we need to be thinking about, learning. And like Jason said, it's so easy to study today. You know, you can go to ChatGPT. I use ChatGPT every day. I use it as a resource. I use YouTube as a resource. All of these things to teach me and educate me and make me smarter. So if you know, there's a lot that Jason shared, but just spend a little bit of time every day learning something new, because I think we'll blink and things will have evolved so fast.
And don't neglect the next generation. They may have their face in a screen, but they're learning at 10 times our pace.
Oh my God, the Gen Zs and the millennials are teaching me so much. I have them on the show a lot.
Yep.
And yeah, there, I agree. I agree. My parents always told me you can learn from somebody older and younger, and they were right, because the 20 somethings are teaching me a ton.
I love it.
Yeah. All right, Jason, thanks so much for being on the show. Think community. Jason, if they want to get a hold of you, tell them one more time.
You can get a hold of me at mortgagetoken.com or just Google Jason Yourofsky and all my contacts pop up.
Great. And if I can help you for any of your coaching needs, jondwoskin.com. Jason, thanks, man. Appreciate you being on the show.
Thanks for the time.